What's going on, everybody? It's Matt, aka the Lumberjack Landlord. Super excited to be here for segment number 2 with my good friend. Oh my goodness, and we have another guest.
Yeah, Sonny was climbing on my lap. I'm like, I don't know that I've ever shown him on your show. So
I don't think so. An
this
even
is
bigger
yeah,
celebrity than you.
yeah, he is. This is one of the two Shih Tzus I have in my office every day. So Sonny, say hi to Matt.
Hi,
Okay.
Sonny. How you doing, buddy? I know yeah. I mean, we hardly ever see him anymore. I get it.
I got made fun of because I was a dog lover. So I'm still a little chapped over that, but that's okay.
I had a French bulldog named Napoleon. Does that tell you anything?
I like
just
dog
goes
lovers.
there, yeah, elbows in, just doing the whole thing. Dear God. So, Mike, what I wanted to talk to you about in this one was really kind of people having the courage to go through a little bit of pain to get to the other side. But I think where I kind of wanted to lead off was we've hit 7 owner occ.
Yeah.
Owner occ loans are now 7%.
Yeah.
I
got a video, 45-second video from Matt, the mortgage guy, who's on my channel every Wednesday at about 5:15.
Yeah.
It's like, Mike, it's right around the corner. He pulled up he had his, phone turned around showing his screen. He's like 6.99 at par, 20% down, best credit, 7's around the corner. And he sent me a text this morning at like, I don't know, 7:15. He's like, well, it's official. We're over 7. I'm like, damn, that was fast.
Man, 7.
Yeah, I thought I called 7, but dude, I called 7 November or December. This is still September. I honestly didn't think there was a chance we get there in September.
Nope.
I thought it'd be just a slow climb up the ladder.
I think the only trend has been everything's faster.
I think that's a fair point.
Everything's faster.
I think you're right. I think
transactions crashed faster than we thought.
Faster, yeah.
But they did crash.
They did.
Pricing is starting to correct in some areas, and it's becoming more broad-based.
Yeah.
But the rate thing, Mike, the rate is going to be what absolutely destroys demand.
Yeah. So October, November, December, home sales. I called the first phase 1, 20% drop. My second phase is 50%. Yep. I thought we would get there February, March. We might get there in December.
I think we'll get there this year. Yeah,
dude,
I think we'll get there this year.
That's
wild. Mike, we're not done raising rates.
No, I know.
It's on the table now that 8 is a possibility even before the end of the year.
Oh, I hope not. Well, let's step back. Investor loans, we're already there.
We're already there, yeah. Yeah, we're already there in 8.
We're talking owner occ, 20% down, best credit. I shudder at that idea. It could happen, though. You're right.
It's coming. And the only question is it coming before the end of the year? And I think it is.
I don't know. That's to me, that's one of those common things. Hey, we're looking at the rate of change and we're maybe extrapolating a little bit too much. It could happen, but one sec.
Okay.
Normally speaking,
yes.
And I'm not saying we're in normal times by any stretch.
Sure.
Normally speaking, the average margin between the 10-year and the 30-year fixed rate mortgage best credit real down payment is 1.5%.
Right.
Normal times. Today we're over 3.
Yep.
Now, could that get worse? Absolutely. Am I sitting here thinking that we're going to go another deviation past normal? Again, I will say, I hope not. It could happen. We are good. Again, what I have said for the last 4 months, and I will say it again, the thing that scares me the most is QT, quantitative tightening.
Yes.
I believe one of the things that we are seeing today is the ramifications of the Fed actually executing QT in September.
I agree.
And you're right. This could go to 8.
It's going to go to 8.
Oh,
it's going to go to, because we have we have 2 more meetings left before the end of the year, right?
Yeah, and we're going to go 75 and 50, which thankfully I called 2 months ago, so I'm standing by that call.
So if we go 125 basis points,
so that will take the 10-year.
If you just stay at the same 300 basis.
Yeah, let's play with that. So we're at 3.25 today. We go up 1.25. We'll be 4.5. I don't know. That's 7.5. I understand the logic.
Yes.
I agree it's possible. I am just not willing to sit here today and say it's probable.
I will say it's probable. Because
this year.
Yes.
Oh.
Mike, when we had done our video in the beginning of the year, I called 6 by June happened.
Yep.
I called 7 by end of the year. I didn't expect September, but I called 7 by the end of the year. It happened.
It did.
50% transactions. I called for a 3 handle on the number. 3 million handle on the annual number for housing sales.
Yeah, so it won't happen in September, but it could happen. It could happen October, November, December.
We will get on pace with October, November, or December. We will. And I think in revising it and looking at now, the velocity and everything that they're doing, what's really funny to me is for a bunch of really smart people on Wall Street, they certainly are a bunch of morons.
Yeah, this was I mean, if you're on my channel, which I know you are, this was the battle I had because I'm a macro economist who doesn't play in the stock market.
Yeah.
And I have one stock trader and I have one 10-year Wall Street vet now. I'm balancing out the stuff. And I've been battling with them. They're talking about we're going back to all-time highs. We'll see what he says this Sunday. I'm going to guess he doesn't say that now. But it's just like, I don't get it. I don't understand. Why does Wall Street not believe the Fed? Jackson Hole was the start.
Yes.
Then Wednesday, the Fed out-hawked the hawks. So I think they're getting religion. Hence, rates went up. And I got a note yesterday. Oh my God, we're at 6 point. And I think the market's down today. I really haven't looked in detail, but pain is coming. Pain. Actually, no, let me rephrase. Pain is right here.
Yeah.
Right here.
Yep. I think that, we're in
down
the
down 640, the Dow as of right now.
Yeah. I mean, we're going to play with high 6s, low 7s. I think with another 125 basis point hike between now and the end of the year, that pushes us high 7s, low 8s, real broad demand destruction at that point. My original call was I thought we would go from the 16.6 in gains that we had this year to I thought we would still be 7, 8, 9 in that range of increase this year.
Yeah.
Mike, if we go to that number, we're going to be reporting some pretty horrid numbers. And I know that it takes time for that to go through a cycle because you put a deal under contract in November, it usually doesn't close in December.
Yeah. So, again, I'm going to stand by a call I'm making all year. I won't change it now. It's too late. I don't think, again, I don't see a negative number year on year this year.
I don't see one. I don't see negative. Nope.
Again. But I think March, the crazy thing is I've been studying the economy for 30 years and housing for over 20.
Mm-hmm.
My ability to see the future is better than most.
Agreed.
And I have a track record on the show to call that out. It's not perfect, but it's better than most.
Yep.
I can sit here today and tell you with a straight face, I have no idea what's going to happen in 6 months. There are so many off-ramps.
The problem, you're exactly right. There's 4 off-ramps, fast ones.
At least.
Right? There's 4 that it's like they do something to put people in homes that is $0 down, and it's like it's a government program
that swings to the upside.
To the upside. They do something where they say, "We'll let you carry your mortgage with you to a new place."
Yeah, totally. Like some people are talking about that. Let me just tell you, I would do that. Yeah, you take my 2.8 and let me carry it to a brand new purchase.
Yep.
I don't know how that would work out in the structure, but yeah, I mean, all these creative ideas could happen.
I found out that it actually does happen.
Really?
Yep. VA.
Oh, VA.
VA. Wow. It happened with a good friend of mine. I was asking him, and he said, yeah, he was able to carry his loan from one place to another house, and he carried his loan with him at the rate.
That's awesome. I didn't even know that was possible. I've never done a VA loan. I don't qualify.
Yeah, me either, but apparently it is. Yep. Apparently it is.
Hey, if you've done a VA loan and done this, let us know. I want to talk to you.
Yes, please. Yes, we want to know more information for sure.
We want validation.
Yeah, but I think it's all sorts of bad. These
are things that I tick off. Like, again, I can see to March, at least in housing, and it's all kind of suck.
Yep.
We're going to see historical collapses in transactions.
Mm-hmm.
I think it's going to be, I think sellers are living in yesterday and the buyers are in the future. That's not a recipe for a lot of transactions. What happens to price? I'm going to stand by 50 years of housing data. Price is stickier than people think. We don't have forced sellers. We have supply lock-in. Could I be wrong? Yeah, but I'm taking my shot. I'm calling the shot. We'll see what happens.
Yep.
Where are rates? Are they over 8? Oh my God. I can't.
Mike, yeah. Like,
I mean, again, think about that.
What makes them stop? Like they've even said, so people have even said that they're going to take the Fed funds rate higher than it was in 07 or 08. They're going to take it higher than that. And you and I were buying debt back then at 6.5% and 7%.
Yeah, I think most of my loans were in the 7s. Yeah.
Right. Most of our stuff was in the 7s. It's not that big of a jump to get to be in the 8s, but
it's not.
But there's not going to be supply. So supply that will help, I think. Right?
It'll help, yeah. Because again, if there's
really you're talking a supply story. You're saying that there's just not going to be enough supply, period, end of story.
Yeah, that's exactly right. Phase 1 of this housing crash was demand destruction. 18 million people qualify at 3, don't qualify at 6. Can you let's just play with this math. This is from John Burns. Somebody go to their Twitter feed. It's right there. Look in their feed. Go see it. They did the math from 3 to 6. 18 million people got a yes answer at 3, get a no answer at 6. Can you imagine how many people got a yes answer at 3, get a no answer at 8?
Right.
It's got to be 30 million.
Mike, I believe with all of the craziness that we saw in 09, and I think that's when it was down 8.9%.
Yep.
Was it 09?
Let's say, I think so. 09, 10, whatever.
Could we beat that number?
On a national perspective? No chance. No chance. Because we have the supply problem. Everybody's looking at demand, which I totally get. I'm saying 30 million people.
Yep.
But you guys don't understand. For the first time in 40 years, we are going to see supply destruction on the same level.
Do
we have no. We have 13 million people with a 2. 13. Yep. I'm sorry, 13%.
13%. Yep.
We have 50%, 3.5. 80% with a 4. We must have 90% sub 5. 95% sub 6.
It's like 92%.
Why the fuck would you sell?
Yeah.
You're at 8.
Yeah.
So we had 30 million demand destruction. Totally get it. I agree. We might have 50 million supply destruction.
Yes.
And in that environment, we still have supply demand imbalance. It's just at a much smaller number. So we're going to do 3.3, 3.4, 3.5 million transactions, but supply demand is still unbalanced. It's just at a much lower number.
So you're far more educated in what this would be called. I have no idea what it's called.
Mm-hmm.
But when you look at 100,000 of anything,
sure,
it's tough to move the needle.
Correct.
When you look at 5,000 of anything, it's very easy to move the needle.
The percentage, large numbers.
Right. So my thought process is, I think we see almost like a bear market in housing where stuff gets completely wonky, and it's really comes down to it's only worth what somebody's willing to pay for it.
Oh, agree.
Right. And then the appraisal piece, because people that think that real estate's a free market are kind of wrong. They're kind of wrong, because the appraiser.
Oh, of course. Yeah.
If it was just supply, like,
there's checks and balances.
Right. You say it's 500K. I say, sure, I'll give you 500K.
Yeah, because it's a lending.
Only 450.
It's a lending business.
Right.
And the appraiser, let's be clear. People think the appraiser is there to protect the buyer and the seller. No, they're there to protect the bank. The bank. 100%. Yeah. So again, carrying on with that logic, right? We're going to go down to such a low number that a wonky market can be very distorted. You're absolutely. Very. But here's the deal.
Mm-hmm.
Lots of people's minds, and I think this is where you go, the distortion goes to motivated sellers at the bottom.
Yes.
Right. Basically, it's a race to the bottom.
Yes.
I agree with you. That might be a problem. But what if this mysterious 25% of cash buyers still are cash buyers, and oh, by the way, they get out of the stock market like I did and you did in the .com crash, and they move to real estate? What if the cash buyer steps up and they start entering the luxury or the move up market, and they're buying for cash, but at 20% off? That's going to distort the market higher. Right? So, again, the law of large numbers, or the small numbers, that could just, I don't know what's going to happen. It is such a convoluted mess. It's weird.
So when people talk about cash buyers, it comes from two places, I believe.
Yeah, let's talk about what qualifies as a cash buyer, because I don't think many people know.
So go ahead.
Basically, a cash buyer is at the closing table. The escrow statement is there's not a loan put in place. There's not a first loan put in place at the closing. That doesn't mean there's not a quick refi after, because that's out of escrow. So that's basically what cash buyer is.
So my belief is that a lot of times cash buyers come from really two main areas.
Okay.
Sold their house with a ton of extra cash,
True,
equity, and they're capitalizing on that.
no doubt. Yes.
And they have massive proceeds from the stock market and investments.
I think there's three. Again, this is like the whole, and this is where we get to argue what the real percentage is.
Sure.
I think there are kind of, I'm leaving California, I'm buying in Tennessee,
Yeah.
I got my bag full of money.
Massive.
Right. So that's
Yes.
something. And it's New York, it's whatever, right? You get it. Then there are people that had a liquidity event. That could be a stock sale, RSUs, whatever. That's going to go down, but that does happen. But I do think there's the third option, which is, hey, I have a home equity line on my home.
Yeah.
I take out an equity line, I buy cash, because that would appear as a cash transaction.
Sure, it does.
And then I go, do a refi or something later after I add value, and then I pay off the equity line. I think that is the third option, right? They borrow on something else, they pay cash over here, and then they refi back, and so I think those are the three ways.
I think HELOCs largely disappear.
Dude, I got 2 texts, or actually they were messages, I guess, for people who had their credit card limits cut. It's coming. It's coming right here.
It's so we have called this all year long. HELOCs go bye-bye first.
Yeah.
HELOCs are going to go bye-bye first, and then you're locked in, you're done, and that's it. You're done. So I think the other two things are, do we continue the migration that we're seeing? Because it's way down from where it was. But do we continue to see that migration? Because to your point, you're still able to sell your condo for $1.5 million in California and buy an amazing home for $500,000 in Texas.
Yeah. So this is the problem of the next two. Again, I've said, and I will continue to say it, the Fed broke housing.
Agreed.
Part of that is we pulled forward demand.
Agreed.
Right. But the demand doesn't stop, and it will pick up speed going forward. Right. For the next 2 years, we will have some external migration, but not nearly as much. No. So the bag full of money, California, I guess sellers that become buyers, is going to be down, but not zero.
Agreed.
So that's one portion of the cash buyer. In a market where you could see the stock market down 50%, like we saw in the bear market of the tech wreck, you'll have some liquidity events. Some companies will get bought. Some people it'll happen, but it will be less. And then we have less home equity lines. So it's just a mess.
I think the number for cash buyers is like way down.
Well, here's the problem.
Way down.
But here's the problem. Just like you said earlier, right? So when we were doing 7 million transactions, cash buyers were 25 or 24%.
Yep.
Let's say we do 3 million transactions. Cash buyers could still be 25%, and it would still be way down, right? 25% of 7 million
it's half. Yeah.
Yeah. It's just like, so it still could be percentage wise the same number, but it's still it's just, this is messy. Just messy.
I think, a total mess, but I think that's what happens. I think cash buyers are one of the biggest casualties, because I think HELOCs disappear. I think the migration path is much less than it was. And I think that stocks, RSUs, forget about it. Forget about it. You are Instacarted out of opportunity. That's the way it goes. RSUs, bye-bye. And even regular stock. Who sells stock that's down 40 and 50% to buy a house?
Well,
only a really smart investor, right?
Well, let's be clear. I did. Right. I sold when I was 80% down.
Sure.
Because and right or wrong, I never went back or didn't go back for 20 years.
Mm-hmm.
But again, I think it is natural. Your thoughts and opinions, I think, are what everyone sees. And I see it too. I look at this going, where can we be surprised?
Sure.
Right? So
here's where we're going to get surprised. Government program.
Exactly.
That's where we're going to get surprised.
No, I agree. This is what we talked about would come next year after the midterm elections. And again, it may come faster.
They might need
right? right here, pain's here. What's the government never messes an opportunity to, create some giveaway stuff. Dude, I don't know. I pride myself in being able to see at least a short-term future. I can't see it. I don't know. I don't know.
Whatever it is, it's not going to be fun for most. And
yeah, the macro pain I see coming, but micro, because I'm willing to do the work, shopping list, 30 your money, yield great deals. I'm ecstatic. Now, some people hear me say that, and some people can see that I truly am excited. They're like, how can you do that? People are going to be hurting. Like, I acknowledge that, Matt. I can't help everyone. You and I have been trying to tell people to get ready for 9 months.
I started my refi in May of 21.
Oh, wow. So
May of 21.
Months.
That's May of 21 is when I started refining my portfolio. So I've got very limited exposure to unfixed rate, but most of it is 5 years.
Yeah.
And so I have a plan already in place where I'm paying down that debt more aggressively because I know it's going to reset, and I know it's going to reset higher.
Yeah.
But
You're right.
my 23 loans that I have that are 30-year fixed rate debt, I couldn't care less. They're sitting there and nothing's going to happen to them.
Nope. I agree.
Unbelievable. Michael, tell everybody where they can find you, my friend.
One rental at a time. I do a live stream for only 60 minutes, but it's right around the corner, Saturday mornings, 8 a.m.
It is. And it's a blast. It's a good time and always great questions. I actually still attend because almost always somebody will ask something that I was like, I hadn't considered that. That's worth that. I'm interested in Mike's answer. And then I will make fun of him Tuesday for whatever it is.
For him being wrong.
All right. As I always say, we try and create great content for you. Please make sure you hit that like and subscribe button, and Lumberjack Landlord 11:30 a.m. Eastern time on Sunday. And we should be debuting the new studio on Sunday. It's been a long time.
I like it.
Yeah. Well, hopefully it doesn't suck. So Mike, thanks so much. We'll see you in segment 3.